What's up, team? Marshall Sparkman here, VA loan specialist. Thanks for joining in. Please like, share, subscribe, all that fun stuff. This video is going to be about VA income requirements. So I'm going to just jump right into it. VA requirements, typically the textbook answer is the VA says that they don't want your debts to be much more than 45% of your income. Now, so what you do is you take all your debts that are reported to the credit bureau. I'm only looking at what's reported on your credit. Plus, I'm going to add your new mortgage payment, total that up, and then divide it by your income. That gives you what's called your debt to income ratio. The VA says they don't want your debts to be much more than 45% of your income, your total debts, new mortgage included. Now, can I get you approved with higher? Yes, absolutely, as long as you got strong compensating factors. Don't come to me with 60% debts and you got low credit scores and you don't have any money in the bank. That's probably not going to fly. But if you've got high debts, but you've got good credit, you got some money in the bank to fall back on, that's not a big deal. So the VA, let me see if I can pop a screen share real quick, but the VA says that we have to verify as lenders that your income is verifiable, stable, and anticipated to continue. All right. Let me hop over here real quick and show you this slide. So it's got to be verifiable, stable, and anticipated to continue. Income analysis is not an exact science. It requires underwriters to review case-by-case basis and use sound judgment, right? So to determine whether income is stable and reliable, they got to have probability of continued employment. We've got to document that. So we're going to look at your past employment record. We're going to look at your training, your education, and qualifications of your job or employment type. For example, if you just got a degree in law enforcement, now you're going to become a cop, we're going to consider that very stable. That's just one example. So income, if your income is temporary in nature, not going to be able to count it. So if you're getting student loan income or VA income that's temporary, that's going to end soon, or if you're in the military currently active duty and you're about to get out and you got an EAS date on your LES, that's probably not going to cut it either. So most income is really easy to document. We usually only have to get a verification of employment through your employer. That's it. Sometimes I'll go ahead and ask for a pay stub, but the VA really doesn't look at your pay stubs. They don't look at your tax returns. They don't look at your W-2s unless they need to. They're really only looking at verification of employment. Verification of employments we have to order through a third-party service. They verify your income. Your employer gets it to us in writing. Usually we'll like to back that up with a paycheck. And if you're a straight up W-2 borrower. Now, if you're someone who is drawing bonuses or commissions or any kind of additional funky income, I'm going to need to get your pay stubs, W-2s, tax returns. Your verification of employment from your employer needs to back up that you have at least a 2-year history of receiving that type of income. Let's talk about that real quick. If you're self-employed or you're getting overtime or bonuses or commissions, any of those 4 things, you have to have a 2-year history, period, end of discussion. If you don't have a 2-year history, you can sometimes get by with a 12-month history, but it becomes very difficult to average because it's tough for an underwriter to say that that income is stable and likely to continue if you don't have a history of it. It's difficult to document that, right? So here's some additional types of income that require additional analysis, okay? If you've got non-military, if you've been employed for less than 12 months at your current job, we got to dive in a little bit deeper. If you've got frequent employment changes, it's gonna require additional stuff. So we talked about the part-time, second jobs, bonus, commission, seasonal employment. If you're self-employed, recently discharged veteran, if you're going to be discharged soon, rental income less than 2 years. This is a really hot topic right now. The VA just recently changed their guidelines for 2020 that states if you've got a rental property, you have to have a 2-year history of receiving that income on your taxes. I got to have 2 years tax returns, and I'm going to use the gross adjusted income from that rental property after all your deductions. We can add back in depreciation and depletion if you have any, but they're looking at the bottom line. Catch to the rental income is if you're doing what we call a primary conversion, where you're taking your primary residence and you're converting that over to a rental property, then we don't have to have a 2-year history. But what I do need is you need to have it under a lease, 12-month lease, and there's other ways around that. But just know if you're doing a primary conversion, I can offset your mortgage that way. If you got child support or alimony, you got to document that. If you're getting any kind of funky allowances, I've got to document that. If you're getting pensions, disability, dividends, annuities, that kind of stuff, we've got to be able to document how much money is in the account, and we got to be able to document that it is highly likely to continue. The VA says your income needs to be likely to continue for at least 3 years. Okay. Another couple things that can catch people, I get this all the time. I'll get a call from someone who is pre-approved from an online call center. I don't even want to call them lenders because they're marketing companies that target market veterans. It makes me sick. Anyways, they don't understand the process, and they'll get stuck on what's called residual income. Now, what residual income is, this is unique to VA loans. It's very important to understand. The VA says, based on the number of people in your house, you have to have enough income left over at the end of the month. They call that residual income. After you pay all your bills, you've got to have, so for example, if you've got 4 people living in a household, the VA says here in the South, you have to have at least $103 a month left over after paying all your bills, new mortgage included. Now, there's some catches to that. For example, if you have an over 41% debt to income ratio, you got to have 120% of the required amount. We counting all members of the household regardless of the relationship. Any other people who depend on you for support, we count them into the household number. For example, if you've got 2 kids living at home, but you had a previous marriage and you've got another child with a previous marriage, you're responsible for 5 people. They're considering your family size 5. So you've got to have the 1039 requirement. That number changes annually. It's probably changed since I did this, actually. So an example of how we calculate residual income, this is a pass or fail. Either you have enough residual income or you don't. I'm always looking at this ahead of time before I send you a pre-approval. If you've got a high, tight debt to income ratio, guess what? I'm pulling residual income to make sure you meet that. An inexperienced lender, this is something they're not going to know or understand, that can come around and bite you in the butt. I get the calls all the time. Somebody that's, oh, we were supposed to close this week, but I got a call that they declined my loan because I didn't make enough money. Well, yeah, sorry, you probably shouldn't qualify for the loan in the first place, sir. However, this is what you're looking at. Take your gross monthly income, take out all the debts that's, if you have any car payments or student loans, take out any credit card debts, take out any child support, alimony payments, take out your future mortgage payment. They also use an estimated utility cost that's a calculator that I have to pull online. Then it gives me, so you subtract all those numbers, and then it gives me how much you have in residual income. In this circumstance, this individual will qualify, no problem. So hopefully I've done a good job explaining the VA income requirements quite in depth. There's some more details, obviously, that I left out because the chapter, it's daunting chapter, and I've got it provided in the links below. But feel free to reach out to me anytime you have any questions on your VA loans. I can do VA loans in all 50 states. I'm here to help you. Thank you.